All right, fellow Micron holders, how you doing? I own Micron right there with you. Want to talk to you about where we're at with kind of the current state of the market. Micron moving down today, the entire AI and the entire stock, market moving down. Want to share some audio with you. This video here, I want to talk about this. Has Micron, SK Hynix, and quite frankly, a lot of the major AI stocks entered into a bear market? I don't think so, but I want you to hear this, and we're going to take a look at this. We're going to listen to this clip, and then we're going to go from there.
Their earnings results were to pay attention to this company because their earnings results were mixed, and it's putting pressure on some of
He's talking about Samsung.
those momentum names like a SanDisk and a Micron.
Yes. First, let me say that memory stocks are in a bear market. Let's go to the Wi-Fi Interactive. I'm going to show you our semiconductor heat map, and I don't have Samsung in here. You cannot trade them in the U.S. directly, but you see a lot of red and dark red. It's going to get worse. I'm going to put this on a 7-day view and sort by equal weighted here, and you can see a lot of these are down more than 20% here. And critically, DRAM, it's a relatively new ETF that tracks the memory space. And let me put a year to date. It just came out in April, but it is down more than 20% from this high right now. And fueling that is Samsung, SK Hynix, and also Micron.
Okay, I want you to note that it was 123% up year to date. You see that, right?
Hynix and also Micron. I'm going to back up here. You can see Micron is down 23.5%. There's a year-to-date chart. So you're still sitting on 225% worth of profit, but the wind has been knocked out of the sails. And I believe chatter on the street here with SK Hynix coming to the US, its US debut, that could very well top tick the memory trade here. So I'm a little bit hesitant going forward with the strength that we've seen here in the memory trade. However, I think it's going to shift to other areas where there are imbalances in supply and demand. That could very well be capacitors. That could be the next big trade.
Okay, that was interesting. I'm going to take note of that. What he said there was that we could be looking at the next one of the next where there's too much supply versus demand is capacitors. I'm going to dig into that. So there will be a video coming. If you haven't already done so, subscribe, and I will be digging into that for you as well in a future video.
Jared, how big a deal is it, SK Hynix coming to market?
I think it's a huge deal. It's kind of one of those banner events. It reminds me of SpaceX for the space trade. Whenever you have such demand for a product, and it takes a while to get these things through, regulatory hurdles and whatnot, when it finally happens, a lot of times the news has already been priced in. So at that point, it may very well be a sell the news event, kind of like those magazine covers. By the time you see a big Barron's cover that says death of stocks or something like that, well, it might be time to buy stocks. But here it's the opposite. I think the SK Hynix IPO this Friday is a little bit ominous.
Okay, so let's talk about what we just heard. That particular analyst was essentially saying, because we've seen Micron hit a 20% drop, that we are looking at Micron has moved into a bear market. If we refresh here, we got SanDisk. Just take a look at it because that's the one I happen to have up. So SanDisk was down 7%, but I want you to note that in after hours trading, SanDisk is already up 12%. So let's take a look at Micron right here. And you can see Micron ended the day down about 4%. And in the last month right here, you can see, we've got that playing out right there as far as the last month, and then down a little bit accordingly. But in after hours trading, Micron's down 2%. So SanDisk is picking back up. I think Micron's going to follow suit. Here's what I want to really come down to. Has Micron and SK Hynix entered into a bear market? I personally don't believe that. That is my opinion. But I don't really think that is in fact what is at play here. I think what we're seeing at play here was an overreaction to Samsung's earnings. It's funny. I reported on this last night. One news source that I saw and that I actually used talked about the fact that Samsung missed on their sales number, beat on their profit number, and also specifically talked about the fact that there was their phone division, Samsung, their phone division that was losing $650 million. Now I'm seeing reports basically everywhere that talks about the fact that Samsung did not miss on their numbers. So we're getting a lot of bad information. I've seen multiple differing reports is what I'm getting at. Okay. But ultimately, I think this continues to be the narrative that we've talked about a lot on my channel. And the narrative is that there is a lot of fear around AI stocks, specifically memory stocks. There's a lot of fear around memory stocks in that, is the AI memory space done? I've just put on the screen here for you a great infographic I created a few days ago. I don't think it's done because you will always come back to CapEx dollars. Now, I will say this, and I've said this in another video. If we get visibility that the hyperscalers and some of the enterprise data, companies that are doing enterprise deals, if they start talking about scaling back on CapEx expenditures, then yes, we need to look at how this plays out. But I'm going to remind you of this, specifically Micron. Micron has locked in 16 strategic customer agreements valuing at $100 billion just for these 16 deals. 22 billion of it of customer cash has already been deposited, already been paid up front. The rest of that is going to be paid over a period of time. That revenue is going to be recognized. It is these customer service agreements, these strategic customer service agreements, that is changing the nature of Micron's business. It's no longer making it very cyclical in nature, things of this nature. I've talked a lot about that. And I think, again, talking about the bull case for AI memory is that right now that the forecast for 2030 is north of $5 trillion spent on AI build out, enterprise build out, data centers, infrastructure, all that. There's going to need to be a ton more chips sold from NVIDIA, AMD, Intel. Thus, there's going to have to be a ton more memory that goes into those chips. And I think that people lose sight of that. Okay. The only caveat that I will remind you of, and I have said this publicly many times, is if we start to hear from the hyperscalers themselves, the companies that are spending, will be spending trillions of dollars in the next couple of years, that they are trying to pull back on CapEx expenditures going out, then we need to look at and have pause for concern. Right now, nobody is saying that. And I want to reiterate that. Wall Street doesn't talk a lot about that, but that's the truth, because those CapEx dollars have already been allocated. They're already being spent, and they're already being forecasted. Because I'm going to remind you of something I've said in a ton of videos, is that the companies that are paying for the build out, the hyperscalers and large companies, enterprise level companies, they are viewing the AI race as an arms race. And I have said this in a couple of videos. What do I mean by that? Whoever is viewed as the loser in that arms race is going to be viewed as the loser in their entire business. And do you think, for example, Meta is going to be viewed as a loser in the AI space? And I'm just using that one as an example. Insert another name here, Microsoft, Oracle, whatever name you want to put in as far as the hyperscalers go, they simply cannot be viewed as a loser in the AI arms race. They can't, because they are deploying capital to ultimately win the retail consumer, the retail users of AI with inference and agentic AI and all that's coming. They simply can't be the loser. Okay. And so what we see here is we see what I call knee-jerk reaction and what's going on in, for example, the stock market. And you can see in the NASDAQ closed down 302 right now. The futures for tonight have not opened back up. But again, Samsung, everybody's talking about the fact that Samsung, their report was what tripped the wire. I agree that it did trip the wire, but we're getting conflicting information as far as what they actually reported. Because I've seen multiple different reports. One says they missed on sales. One says they didn't. One said, and that they did beat on profit, right? One says that it was their memory sector that, was the bad part of it. No, it wasn't. Okay. Memory sector, they've consistently raised their price and it's booming. Remember that Samsung is this large monolithic company that makes TVs and phones and washer and dryers and, memory and all this kind of stuff. They are a monolithic company. Okay. And so we have a lot of conflicting bad information that's flooding into the market. And by the way, we did have China's DeepSeek come out, said they're quote, developing their own AI chip, triggered renewed selling, blah, blah, blah. Okay. In my opinion, anytime Wall Street can step in and create fear and uncertainty and doubt to drive the prices lower, to ultimately be able to buy in lower and all those kind of things, I think that's what's happening. Okay. And you have emotion and panic selling in the streets. I do not think we've entered into a bear market. I mean, look at SanDisk. SanDisk has already bounced back. Let's see what NVIDIA is doing in after hours trading. So NVIDIA was down about 1% today. It's bounced down another 0.4%. One that was hit today was AMD. Let's take a look at AMD. Okay. So look at this. You see AMD was down about 8% in today's trading. It's already bounced back 1.6%. So Micron, let's see if it's continuing to move down or not. Micron's getting hit more because it's viewed as the bellwether of AI memory, because it really is, because it's the only American-based company. And I think it's getting hit harder because of the disinformation coming out about Samsung. Okay. And I think it's getting pushed down. I think that it is. Now, again, I want to go back to the title of that video, the title that I showed you earlier when we opened the video. And it was the fact of and what that analyst said in this video right here. I simply don't think that we've entered into a bear market. I don't, because a bear market signifies a prolonged move down. And if you look at Micron's business and also kind of the entire AI memory business, look at just nothing but this section right here in the middle, the CapEx forecast. And I talk about that all the time. Okay. And what did I say? If we get visibility that CapEx dollars are going to start drawing up, that's a different discussion. But I want to remind you that these CapEx dollars, especially the long-term deal, like the long-term deals from Micron, and Micron's talked about them, the strategic customer agreements, they go out 4 and 5 years. They just signed a big deal with General Motors, Ford Company, all that kind of stuff. These are multi-year deals, okay, through 2030. Most of them are signed in the upper right-hand corner. They're signed and in effect through 2030. Okay, so there's tens of billions of dollars. In fact, about $80 billion in these contracts that hasn't even been recognized yet. And the revenue will be recognized as the fabrication facilities for Micron come online and as Micron ships those, those memory chips, right? And again, go back to the bull case. All this, go back to CapEx dollars. What you need to be on the lookout is any rhetoric coming from the hyperscalers. We will be watching on a go forward basis the hyperscalers earnings announcements. And if there's any rhetoric coming from them about the reduction or the pullback of CapEx dollars spent on AI, that's a different discussion. But that's not where we're at. We're not there right now. None of that's taken place. So I think that Wall Street is using this as an opportunity to create fear and, kind of blood in the streets, if you will. And there's people out there that are selling because they think the sky is falling. It simply is not in my opinion. Okay. That's just my opinion. It's my channel. I get to talk about my opinion. I would like to hear your opinion. Drop in the comments below. Do you think I'm wrong? Would love to have a discourse with you. I'm open to a very good discourse. If you think I'm wrong, give me some reasons why you think I am. I am the first to admit that, hey, maybe I haven't looked at every single component here. And there's always aspects to, these large businesses like Micron's business or SK Hynix or whatever it is. Speaking of SK Hynix coming to the United States, this is going to be an interesting debut for their IPO, their ADR, their IPO on Friday. Are they going to push it? Maybe not. I don't know. Depends on how we look at the rest of the market. Wednesday, Thursday, because whatever the ending price for SK Hynix is on the Kospi on Thursday is relative to what the diluted price is going to be for the United States when they debut on Friday. So we'll to see that, and maybe that's part of it. Maybe there's a concerted effort to drive the memory market down so that SK Hynix opens on at a lower price when it opens here in the United States. I don't know. Stranger things have happened, right? You never know. The word manipulation, it can be used and thrown around sometimes. Manipulation can simply be an event where fear is introduced into a market, like we're seeing, in my opinion, in some of the rhetoric and some of the stuff that we're seeing, especially like in this. And look, this particular analyst, it's fine. I get it. But you can't quantify a single one-day bump down 20% when we've gained over 250% in the year to date as a bear market. I disagree. To me, a bear market is a sustained bear move down over time. And yes, I know that in the last month, it's been a little rough. So one could argue, okay, in the last month, we have been somewhat of a bear market. All right, that's fair. So let's take a look at that. So if we go here real quickly, if we look at the last month and you look but see, look, in the last month, Micron right here, see 1 month, we're down 1%. That's not a bear market. Micron is not in a bear market in the last month. In the last 3 months, we're up 130%. Okay. In the last 6 months, we're up 187%. So where are you getting bear market? We simply are not. Would you agree or disagree? The numbers don't lie. Micron Technology, 1 month, you see it. We're down 1%. Oh no, sorry, we're up 1%. Sorry, I was used to looking at that like it's down. Okay. No, yeah, down $10, 1.3. Okay, let me 3 months, up 127, 130%. Yeah, sorry. Been a long day. My apologies. Okay. So, on the last month, my apologies. We're up 1%. We are not in any, we're not. Okay. When I see rhetoric and I see information out there like this, and it just makes me kind of go, okay, we're not in a bear market. And it's because that creates fear and uncertainty. When people hear the B word, bear, they go, oh my God, the sky is falling. Should I get out? No. That's not how I feel. Again, you have to do what's right for you, right? And he mentioned the DRAM ETF. Okay, let's take a look at it. So let's go right here. Let's take a look at DRAM. All right. And if you look at the DRAM ETF, it's down 6% today. It's down 0.79 right now. Okay. Now on Yahoo, it doesn't give me the numbers as it changes right here. So, there we go. On the last 1 month, we're up 8.6%. On the 6 month, we're up 124. So again, even the DRAM ETF in the last month is up 8.6%. Last 5 days, it's down 15.7%. Okay, I get it because it's been a rough couple of days, but this is not, in my opinion, a bear market. A bear market is sustained over time. It's my opinion. Okay. So let me know your thoughts. I would love to hear from you. Thanks for giving me a few minutes. So I do not think that Micron and SK Hynix have entered into a bear market. I don't, but I'd love to hear from you. Drop in the comments below. Thanks.